Ladies and gentlemen, welcome back to the channel, my fellow Rezolvians. Rezolve AI had a green day today. On a Fed day? Say what? Okay. We're going to discuss what happened today. There is an option trade today as well from a hedge fund or institution, one of which that is very bullish. We haven't had a lot of this activity in a while, so I'm going to share that with you. The short interest continues to rise in Rezolve, although there was quite a bit of shorts covering today. Now, we're going to talk about what the Fed today means for Rezolve into the end of this year. Okay, doesn't mean that we are now set up for an end of the year rally. Does it mean the opposite? Okay, now we know there are catalysts coming for Rezolve at some point in December. I don't know when. Could be any moment, could be weeks from now, but we do know that there's a big catalyst coming, and that's also important to remember. Now, we also got Oracle earnings today in after hours, and I will share that with you alongside what Donald Trump just said about this economy, about the Fed, about inflation, and so much more. Do me a quick favor, ladies and gentlemen, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come join the trading community. But with that said, let's begin. Okay, now first and foremost, let's discuss what the Fed said today. Let me just give you an overview, okay? The Fed did not really change much from their September SEP, okay? Summary of Economic Projections. Not a lot changed, okay? They almost looked identical at face value. Specifically, the federal funds rate projection remained the same. Did not move. The Fed projected 3.6% by the end of this year, which is where we are now, the midpoint of the federal fund range. 3.4% by the end of next year, pricing in about one cut, and 2027 stayed at 3.1%. There was zero change on the projected federal funds rate. This is what we talked about for days heading into the Fed. There was not going to be a big change today. There was not going to be any big predictions made by the Fed for the path of the federal funds rate. Okay, because we have so much data that we're going to get over the coming weeks. Jerome Powell said, we take things meeting by meeting. Okay, he didn't even take a hardline approach on a pause in January. Like he said, hey, most Fed officials agree that a pause in early 2026 is the most likely outcome, but he's still leaving the door open for anything to happen. Why? Because we get that big data next week, and the markets are going to price in what they feel the Fed should do. Okay, and that's why the Fed didn't take a hardline approach today. That was my expectation, and that is a big positive for this market. But what's actually interesting as well is the Fed raised their GDP forecast a little bit for this year from 1.6% to 1.7%. But next year, they raised their GDP projection from 1.8% to 2.3%. So the Fed massively raised growth expectations for next year. They kept their unemployment projections the same at 4.5% by the end of this year and 4.4% by the end of 2026. They lowered their PCE target a little bit from 3% to 2.9% at the end of this year. They lowered their PCE inflation target for next year from 2.6% to 2.4%. Now, they also lowered their core PCE projection for the end of this year from 3.1% to 3%, and lowered their PCE projection for next year, their core, from 2.6% to 2.5%. So they lowered inflation expectations. They raised GDP expectations a lot for next year and kept unemployment the same and kept the federal funds rate projection the same. So basically the Fed saying, hey, look, we think we're going to have better growth next year and lower inflation than we thought before in September. Okay, that is about as good as it gets. Now, you would have wanted to see the expectations for Fed cuts to go up a little bit as well. He didn't get that. But again, it's all determined on the economic data. In a idealistic situation, you would want inflation to plummet and the economy to do well. Now, Jerome Powell says that without tariffs, and as long as we don't get any additional tariff increases, that goods inflation in tariffs should peak in Q1. That is what Walmart said on their earnings. So I think Jerome Powell is kind of getting that from Walmart and what retailers have said. Jerome Powell says without tariffs, inflation would be in the low twos. So basically, I think the big question is next year is not what happens to the economy, not do we have a recession or not, as some people were fearing in the last 2 months, but the question really is how much does inflation come down? How much progress do we make on inflation? And it's progress on inflation that's going to determine, what happens to this federal funds rate situation. If we don't make any progress, we get 0, maybe 1 cuts next year. If we make a lot of progress, we get 2 or 3 cuts next year. And I think that's the best possible scenario you want to be in, right? It leaves it data dependent, not on do we have a strong or weak economy necessarily. That's obviously going to always be there. But assuming we're going to have a strong economy, it leaves the question of rate cuts up to inflation, which is theoretically how it should be. So I do personally think, as I projected before, with the Fed out of the way, with a strong September and the strong seasonal setup that we have in December, the economic data that we get December 16th, which is going to be next Tuesday and likely, throughout next week. I haven't actually taken a look, but I know we get a lot of data on December 16th. You're set up for a very aggressive short-term rally here. Now, if next week's data comes in good, then like inflation coming down and the economy doing well, then you can start to price in more than 1 cut next year. And for the Fed to be cutting into a strong economy, into an economy where inflation is coming down, where AI is alive and well, and the consumer strengthens, big beautiful bill, no tax on tips, no tax on overtime, being able to write off, auto loan interest, all of those things, helping the consumer out. Real estate potentially picking up a little bit could unlock a lot of equity in people's, bank accounts, right? People would be finally able to sell their home, buy a new home, and realize that equity gain. Because it's kind of a messed up situation we're in right now. I've given this example on the channel a couple of times now, but if you bought a home in 2021 and you still work the same job, you might have $100,000 or $200,000 of equity in your home, but you might not be able to afford the same kind of mortgage you got back in 2021 because of where rates are and where home prices are. So you may not qualify for a new home, but you have all of this equity that's basically untapped in your home. It's kind of a weird situation we're in, but that could unlock hundreds of billions of dollars. Okay. Beyond that, we're going to have trade certainty next year, a lot more than we had in 2025. We're going to get a new Fed chair in May. And there's something else I'm missing, but point is, we have a strong setup for next year. We have a strong tactical setup for the end of this year. There will be a problem at some point next year, but from where I see it, it is an easy decision to get long quickly in this market, especially from a tactical perspective. If you're underperforming the S&P, like as a hedge fund or institution, you want to not underperform the S&P that much. You want to get things right-sized pretty damn soon here as we exit this year. Now, Oracle earnings did come out here in after hours as well. Profitability, adjusted EPS came in a lot better than expected at $2.26. Estimate was $1.64. Adjusted revenue did miss, coming in at $16.06 billion. The estimate was $16.21 billion. They also missed on operating income a little bit. Adjusted operating margin missed a little bit. Cloud revenue missed a little bit. Software revenue missed a little bit. So a slight miss across the board, but for the stock that was really beaten down in the last quarter, it's not nearly as bad as I think where a lot of people thought it could be. Oracle is down about 5% in after hours, but again, not a terrible situation either, considering the bond market blowout that Oracle had over the past 2 months. Now, Donald Trump comments on the Fed chair selection process today. He says, quote, "I am meeting with Warsh today." Donald Trump says you can have tremendous growth without inflation. That's the best case scenario, right? That is the idealistic scenario for next year and for this market is you have tremendous growth and inflation comes down. That happens, you're golden. Donald Trump says, quote, you're going to laugh at this, "Don't see why we can't have 20%, 25% GDP growth." Yeah, that would be insane. U.S. President Donald Trump just commented on today's rate cut decision. He says the rate cut was a smaller number and could have been more. Donald Trump says the Fed interest rate cut could have been doubled. That's actually what Fed Moran voted for today. There was 3 dissents. Fed Goldsby, Fed Schmidt did not want to cut rates at all today, and Fed Moran dissented because he wanted to cut rates by 50 basis points. Donald Trump says if the market goes up, we should encourage it to go up more. Donald Trump says the stock market should continue to go up with great results. Donald Trump said today we should be able to do more than 3 or 4% GDP growth. Donald Trump says we'll approve plant construction in a matter of weeks, basically saying they're cutting red tape and we're getting building in this country. And one of the other big headlines from Powell today, Fed Powell, when asked if we are seeing a positive productivity shock, says yes. That is massive, okay? Because productivity is growth. Productivity going up is growth. Now, as I said before on this channel, in the days leading up to the Fed today, like, it wasn't going to shock me if we had a volatile reaction after the Fed, but the bigger reaction comes on Thursday. That is still the outlook that I am thinking about here. It takes time for big money to really adjust to new policy, to position for a new policy regime, which is where we are now. We're no longer in a series of, consistent rate cuts. We're now in a wait and see approach with a very strong economy and inflation hopefully coming down. We're more data dependent now than we were before. It's going to take a little while for firms to adjust, but this is ultimately the best position you could possibly be in from an equity investing position, right? You want a strong economy no matter what. You want inflation coming down. You want rate cuts, but not if you have to sacrifice the economy. Jerome Powell said, we are experiencing a positive productivity shock. I've never heard a Fed chair say anything like that. That's huge. That's a big nod to the AI trade. Now, not to mention that in the very short term as well, the Fed is going to be injecting about $60 billion a month, including mortgage-backed securities rolling off the Fed's balance sheet, into short-term treasury bonds. So this could help fuel some of the liquidity in this market, which could help some of the AI trade, some of the more risk-on areas of this market, including something like a Rezolve. Okay, Rezolve was up 1% today. It was not green across the board for some of these AI stocks like a Rezolve. Rezolve did okay, but some others did not do nearly as good. Now, we really didn't get much news in regular trading for Rezolve. We did get a press release that came out a little while ago. Again, one of those not really impactful ones. Rezolve AI says congratulations to Marcelo Lopez, founder of Rezolve SmartPay, on being named one of the Web3 leaders of 2025 by the BN Crypto 100 Awards. With SmartPay's digital asset infrastructure, Rezolve is building the first platform where AI agents can not only discover and compare products across retailers, but also negotiate and complete transactions instantly using digital assets. So, again, not really any specific news today for Rezolve, But we do know there's a big catalyst coming. What is the big catalyst? Okay, we should all know this. The big catalyst is updated ARR for December. Okay, we're going to be getting that updated ARR for 2025 coming out any day now in December. And that's the big catalyst for Rezolve at this point. I think the market conditions are ripe to actually reward Rezolve for a guidance raise on 2025 ARR or 2026 ARR, with liquidity opening up, with higher growth expectations, with Jerome Powell out of the way, with the tactical kind of Santa Claus rally setup that we have. Things look good for Rezolve here. Okay, I don't really see the downside catalyst at this point, unless the economy were to weaken next week and inflation were to go up or something like that. Then you get more rate cuts. Maybe you get more rate cuts. It could be a little uncertain once the data comes out, but that's far from my baseline expectation. Now, for Rezolve, today you had one option order totaling $132,000 from a hedge fund or institution. This is for May 14th, 2026. It is a $5 call with a break even of $7.50. So that is predicting some pretty extreme upside from the closing level today of Rezolve at $2.77. Somebody is betting that Rezolve does make quite a move to the upside. Now, here on the day today, short interest is estimated at 12.14%, which is up a lot from where it recently was at the end of November, like a month ago, less than a month ago, 3 weeks ago, at about 5.5%. So up quite a bit from there. And it does look like about 4.2 million shares were covered on today in Rezolve. So, who knows? Maybe somebody's getting ready for that December ARR update. Maybe it was just because of Jerome Powell and the risk on, sentiment out there. But there was some shorts covering on some of their short positions. Now, from a technical perspective, you've kind of baselined out here. It almost, again, looks like you have an inverse head and shoulders pattern, which is bullish. Looks like you got a shoulder here, the neckline, the head down here, a little bit of a shoulder here. Wouldn't surprise me, again, if Rezolve does make a move to the upside. You want to get above $2.89 at this moment. Then your 200-day moving average at $3.08. You get above that, it opens the door, the pathway, into the $4 range. Okay, then you're going to be met with your 50-day and your 100-day moving average. If you can break out above that, things get really exciting to the upside from there. But I do think at any real moment now, once we get that ARR update, you have substantial upside from here in the very short term. Anywhere from 45 to 50% upside just to get to your 50 and 100-day moving averages could come pretty quickly. I mean, imagine if we do get a big beat on 2025 ARR and maybe Rezolve does confirm that they're going to start reporting on a quarterly basis. Maybe they raise 2026 ARR with the valuation that Rezolve has right now. By the way, it just got a reiteration of a $15 price target. There's a lot of room for quote-unquote multiple expansion at this point, especially with the economic backdrop that we have and following Jerome Powell. So, I'm not concerned at all about Rezolve. It's really more of a, when do we get the rally, right? When do we get the breakout? When do we see the upside at this point, in my opinion, versus are we going to see it, right? Are we going to see another rally in Rezolve? The answer to that, in my opinion, is an easy yes. Okay, RSI is sitting at about 38 as of right now. And the MACD line still positive, trending higher. MACD line's negative 0.34. Signal line's negative 0.41. The yellow line is above the blue line, so that continues to be on a short-term basis a sign of a reversal and a sign of a, what should be an upside move coming here pretty soon. The MACD almost never lies. When the MACD goes positive, typically you want to be long that stock. Just my opinion, just what I've noticed. That's what the technicals say. But hey, anything can happen. Now, as far as tomorrow, we're not going to get much in terms of economic data. Let's see. We do have initial jobless claims and the balance of trade for September. That's going to feed into some of your Q3 GDP numbers. Initial jobless claims going to tell us more on the labor market, but I think it's mainly going to be about digestion of this Fed meeting today and what that ultimately means for this market. And then Friday, you have couple Fed speakers, Fed Goolsbee, one of the dissenters today, Fed Hammock, and Fed Paulson that will be speaking on Friday. So, in terms of resolve, come on, management, any second now, like any moment would be good to release that ARR. The update, the question is, when is that coming? Okay, and we know it's in the month of December at some point. Hopefully not December 31st. Hopefully sooner rather than later. But we'll have to see. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.